Hi, and welcome to the New Property Show. I'm Steve McMenamin. On this show, the law, what you need to know, conveyancing, contracts, and leasing. Our panel, why are we paying too much? But first, Amir, on their investment system. Amir, welcome to the New Property Show.
Thank you for having me here, Steve.
You're a buyer's advocate. Would you like to explain what a buyer's advocate does and the services that you provide?
Sure. Basically, in the exact same way that sellers use a real estate professional to sell their property and negotiate the best price, vendors advocate help buyers to purchase their ideal property. We basically help them to buy the right property in the right location and with the right price. We help them to save time and money, and we also maximize their profit, minimize the risk and holding cost. And this is very critical because property investment is one of the fastest way to grow your wealth in Australia. And it is very easy also to get it wrong. With a poor choice or listening to a poor advice, you can easily lose hundreds of thousands of dollars in the long run. Let me just give you an example. Imagine purchasing a property for $700,000. In 10 years' time, that property with the average growth rate of Australia, which is 7%, would be worth around $1,400,000. But with the right advice and purchasing a property in a suburb that has additional 2% growth, that property value would increase by $1,660,000. That is a significant $260,000 of difference in only one investment decision. That's not just a number, that's a completely different lifestyle. And that is why knowledge is not only power, that is key to unlocking your dream life. And this is where we can add a lot of value to our investors by helping them identifying and purchasing a property in locations where actually it has high growth and also has high cash flow, which helps them, especially in this condition that people are suffering with a high cost of interest rates.
Of course, because you don't have to just be average. At the end of the day, if a property is typically known to double, it used to be every 7 years, but every, say, 10 years, so it's 701.4, you don't have to be the average of that. You can have properties out there that could exceed $2 million in value if you purchased around the right infrastructure. And you could also have, if you bought an apartment, sometimes that $700,000 property is, guess what? Worth $700,000.
Yeah.
So you've got to be very careful, and that's why it's
Absolutely.
important. Knowledge is power. So second question would be your process, okay? So do you want to run me through how your process as a buyer's advocacy would work with the client?
We have a very solid 6-step process, and that starts with initial consultation. Then we create the strategy. Then we go through suburb selection, property selection, pre-purchase due diligence, and also at the last step, we help clients to find the right tenants. So we basically start by understanding the short and long-term goals of our investors, and then we help them to create a very customized strategy that aligns with their investment criteria. Then we base that strategy to find the suburbs that matches their criteria. At Property Demand, we specialize in analyzing 15,000 suburbs in Australia using our data-driven research process. And through that process, we identify the suburbs that the demand exceeds supply. So in property investment, as you know, capital growth is driven by the balance of supply and demand. So that is where our system add a lot of value to clients by identifying those booming suburbs and find them suburbs that not only have high growth potential, but also high cash flow. So after we finalize that suburb research, we start looking at properties. So that's basically our property selection process, which is very, very selective. We reject 97% of the properties on those suburbs. And after inspecting the properties and making sure that everything is okay, we undertake a very comprehensive price analysis just to determine the true value of that property and to create our negotiation strategy. And after we secure that property for our clients, we help them to find the right tenant. We basically hold our client's hand from start to finish and try to create a memorable, stress-free experience for them.
Beautiful. So I'm just going to throw something in the middle there before the next question. Is this, let's say you've identified a property that has been a owner-occupier for 30 years. Some of these properties have been set up in a way that they're comfortable for the family home, but now they're converting. It's like from a car to a race car. Okay, now they're switching gears. Sometimes there's a few things that need to be done to the property, no matter how you buy it. It may need a new kitchen or laundry, those sort of things. Is there a small step in the transition there when they've settled on the property? You're going to need to get it investor ready. That could be the tiles need to be done in the shower because you might need to facilitate elderly people that are moving in, or there's been an incident there. Is there a small little active service there that you do also provide if needed?
So we use a very broad range of partners that we engage to add value to our clients.
Excellent.
But as I mentioned, we really try to align our clients' strategy to what we purchase for them, and this is aligning the property, the selected property, with their needs. Let me just give you an example. We have clients that they clearly state that we don't want to do any kind of reno, and we want to purchase a move-in ready product. So in those scenarios, we reject those properties. But for the investors who really interested in adding value to the property through renovation, we actually create our strategy that way, and we select a property that has the quality for cosmetic renovation. We can even help them through our partners and friends to help them to finalize their renovation so that they have a property that they have already added value to it and make it move-in ready.
Because I think the ideal property there would be a hybrid, which is something that is ready to go.
Sure.
But you still see the potential, and that's why they pay for the advice there. You give them a little bit extra for their money. So hence the good investment. Now, any market trends at the moment that we should highlight that's happening?
So it is very interesting. After interest rise, we've seen many investors forced to sell their properties because they couldn't afford to hold it anymore. And that is a typical case in Victoria, for instance, at the moment.
Got some land tax issues.
Yes, land tax issue and high interest and low rental yields. So in Victoria, the average rental yield is around 2.5% to 3%. And that's low rental income alongside with high land tax and interest rate force people to sell their property. And we've seen 25% of Victorian investors selling their property recently, and they moved their investment to Queensland, Western Australia and South Australia. The same trend in New South Wales, that people don't find that high yield properties.
Which also actually does put, does put pressure on the rental market as well. So
Exactly.
if you actually stay in the market, the rental yield's going to go up.
That is correct. But we have different trends, and some people try to move with the cycle. So it's just different strategic planning. Some people said, I want to have a short-term gain. Other people just said, look, the market will change. I will sit down and stay. And, I will have a much higher capital growth after 2-3 years, because growth will come back to Victoria anyway. And infrastructure is here, population growth is happening. So we're definitely gonna have positive impact. We're gonna see positive impact in Victoria, but for investors who want to add a lot of value to their current portfolio using short-term strategies, it's a very powerful strategy. And to me, having a balanced and healthy cash flow from the portfolio is the key. Because if you can't afford to hold your property, no matter how high it's going to grow, you cannot hold it. So with the trend that we are seeing, people are interested in more in properties with higher yield, and that is where the majority of people trying to balance their portfolio by investing in areas where they know that they will grow, like Melbourne, but not short, but they will balance it with their other investment in other states.
Typically, I want to thank you for being on the New Property Show. We will be having a debate and look forward to seeing you again soon.
My pleasure. Thank you for having me here.
Joseph, welcome to the New Property Show.
First up, thanks for having me, Steve. Pleasure to be here.
A couple of things we want to touch on the New Property Show is conveyancer versus solicitor, touchy subject. The benefit of having a solicitor, do we expect to pay a lot more money to have your services? And let's investigate maybe leasing for our
Yep.
more sophisticated investors on here. Commercial leasing, how that works, and I'd be interested to explore that. So, first of all, solicitor versus conveyancer. Why?
Well, look, solicitor, we've obviously studied for quite a number of years longer and work in property law rather than just the conveyancing process. So there can be, depending on the size of the transaction, it really depends on what level of expertise you need. So if you got the standard residential mum and dad transaction, conveyancer can assist. I mean, we've got within our team, we're not all lawyers in the office, and there's conveyancing staff that run most of the conveyancing matters. I get involved and I check off on everything. Nothing goes out the door without me looking at it. But it's really those complicated transactions that I might say, okay, I'm running this from start to finish. So we've had a few of those recently. For example, we sold a property 12.25 mil. So a matter like that where there's significant contract negotiation that needs to go in, I'll step in as a lawyer and say, this is what we're covering for these reasons. And that, for example, had compulsory acquisition involved. So it's type of thing that your standard conveyancer would never have come across. So you need to have that specialised knowledge, and just particularly when things go bad. We're dealing with another matter at the moment, once again acting for a purchaser, or actually this one we're acting for a purchaser. The vendor failed to do what they needed to do by settlement date. We issued a default notice, terminated the contract, and the vendor's refusing to hand the deposit back. So once again, we're talking about a multi-million-dollar property where a lawyer then needs to get involved, which is what we're doing, and we're gearing up to go to court, where conveyancers simply can't do that.
So sometimes let's play devil's advocate here. So are you just as good at getting people into deals or just as good at getting them out?
Well, look, it is a good question.
Yeah.
Because quite often, lawyers can get in the way of the deal itself.
Yes.
And we argue over things that, you know, for most people say, why am I dealing with this? This will never come up. And from a lot of those, 99% of the time, they don't come up. But that 1%, when it does come up, you'll be thankful that your lawyer argued so hard to negotiate a term to protect you. So definitely good at getting them out if they need to get out. But I think we're there to facilitate. When people are there to do a deal, it's our job to help them do that deal.
I think importantly too, there's a couple of parts of the deal. There's the contract itself, which is the terms and conditions, the acquisition. Then you've also got duties to be paid and certificates behind the scenes. So all the things that the general conveyancer would take care of.
Correct.
Then you're going to have the terms and conditions, which is the needs to be settled on this date. Here's the penalties if it's not fulfilled, and here's the consequences if we go beyond that. But then there's another part of the deal, and this is the magic part of the deal. That's when two people like yourself butt heads.
Yep.
And there's a couple of ways to get around that. Now, one thing that's frustrated me before when I dealt with a particular lawyer is, as a customer, I wanted to ring that bloody lawyer and say, hey, get my deal settled.
Yes.
I was on the other side. Worst thing they ever did was give me radio silence. Did not know where the deal was sitting, did not know where the penalties were, didn't know if the deal was transacting, and they were playing a game of cat and mouse because they were just trying to get more money out of the deal. And right on the 11th hour, added on some penalties, that sort of stuff as well. So how do you deal with those people? Like, do you have the relationships behind the scenes?
We do.
Yeah.
Look, it's frustrating. Communication is key. With anything, communication is key. And keeping your client in radio silence is one of the worst things you could do. So having that ability to pick up the phone and speak to someone on the side and not relying on their mercy, but having the law behind you to back you up and knowing the contract terms, knowing ways out of it if need be, but still approaching it with a collaborative manner to say, look, our clients both want to get this done. Put your ego aside and let's get it done. So having that ability to pick up the phone and have the conversation really takes things a long way. And I mean, once again, I don't talk bad about anyone, but we've had to step in and save deals on behalf of conveyancers before, where our clients have contacted us and said, look, I've got another conveyancer dealing with it. They've hit this roadblock. Can you step in? And quite often they're dealing either with a conveyancer on the other side who's got that ego, you know, and just clashing, or they're dealing with a law firm who's saying, well, I don't need to deal with you. I don't need to give you that respect because you're not a lawyer like me. And we've stepped in and we've had to solve it, you know. One recently we dealt with, it was two conveyancers clashing and butting heads. And so we stepped in. I was quite a bit aggressive, a lot more aggressive than I'd usually be. But I got the conveyancer to direct her anger at me. I then, in the background, spoke to the other conveyancer and said, look, she's directing her anger at me. You're now primed to step in and finish the deal. And that's what happened.
Excellent.
So it didn't matter about right, wrong. Let's get it finished. And that's what happened.
It's all part of the game. I look at life like chess. We're just all making moves, and sometimes all you did was just take her to the side and distract her, and that's a classic. But they're the sort of skills that you can't buy. Some of that's taught. For our more sophisticated investors here and those that have built a property portfolio, I know it's a new property show. We've done some residential deals, $500 to $1 million. Now we're going to play in the not necessarily the acquisition side, but we want to lease a warehouse, those sort of things. So would you just give us some of the basics with what leasing is and really what we should be looking at? Yeah,
so there are quite a few things. So you need depends who you're acting for. Whether you're acting for the landlord or acting for the tenant. Either way, you should get, it is a legal document that has significant consequences. So an example of one I'm dealing with currently, where we're in the process of selling a business on behalf of a client. The client also owns the land. So we're also putting a lease together, and that purpose of the lease is for the incoming tenant to sign up. Now, one of the things we're negotiating is whether to include a demolition clause in the lease, and the demolition clause basically gives the landlord the right to give notice, and we've proposed 12 months notice to the tenant to say we're proposing to demolish this site. Now, my clients have no intention of demolishing the site at all, but I've said to them, you should put this in there because if you want to sell this block, you're not going to get any developers interested at all if you can't demolish the site. So it's about future-proofing them and their deal because the lease term itself might go on for 15 years or longer, who knows. But if they might not want to hold on to the property for that length of time. So if they want to then sell it, they want to make sure that they're not limited in who they can sell to. So that's one of the things that we're negotiating now, that if we don't get it right now, can have long-term effects for them.
Now, if it was me, would you tell the other party you're putting in the demo clause, or do you just put it in there and hope and let it slide? What do you do there?
We're dealing with lawyers on the other side.
So they're going to pick that up.
So they picked up on it already. Yeah. So I've already picked up the phone and had the conversation with the lawyer.
Yeah.
And because they obviously want the demo clause removed.
Yeah, of course.
So we're now trying to work out some solutions that make everyone happy.
Perfect. So now, is that a touch of ego in there, putting that there, or you really are looking after your client?
It's really just to look after them. That's all it is. So I've got no idea what their plans are, but they're selling the business because they want to retire. They want to move on to the next phase of their lives. That could mean freeing up some assets.
In a future episode, we'll see if the demo clause was approved or not.
It might not be for another 8-10 years before they ever use it, but we'll see how we go, I think we're going to get it in, but one of the solutions, for example, we're discussing is putting a minimum time frame before it can be used.
Okay.
So that will keep everyone happy in that sense.
So what's another one here? What's satisfying about your job? What do you enjoy about it?
Honestly, the most satisfying thing is getting those good outcomes for the clients.
Yeah.
Where you get people that come not necessarily knowing the law, not knowing which way to go, not knowing, they know how they want to get to point B without knowing how to get there from point A. And stepping in, understanding their situation and giving them that proper guidance, not just legal advice, being their trusted ally, their trusted advisor to help them navigate the law, because it can be quite tricky.
If you were to build a team, you've got 4 people to be on your team, and you want to purchase a property for $1 million or less.
Yep.
Who are the 4 people, apart from a lawyer, that you need on your team?
Definitely need to have the mortgage broker.
Yep.
Need to know your finances are there. Need to get a property advisor to tell you what it's actually worth. And potentially, I don't even know if we need 4. You should always get title insurance. So title insurance, your lawyer conveyancer can assist you with that. And that's really to step in if there's an issue with the title itself after the fact. So if you haven't done a land survey, for example, and then after you settle, you realise where the fence isn't on the title boundary, title insurance can come in and try to compensate you, if not rectify the situation.
What about an accountant?
Accountant, it depends on what you want to do. Number one, are you purchasing a commercial property or are you purchasing just a residential property? Residential
for future development.
Residential, definitely an accountant.
Yep.
Because you need to work out whether you're purchasing in your own name, purchasing under a trust, purchasing on a company, purchasing with a partner, tenants in common, joint tenants, all of this is important. Potentially a buyer's advocate depending on your confidence in
And depending on the skills,
negotiating.
because I've interviewed a lot of people, and when you get to a specialist as your
Yep.
field, you start advising others. So sometimes I've met buyer's advocate that could almost cream a solicitor, a broker, an accountant, because they're in the game. They've got skin in the game, and the knowledge is there. But I think out of all those 4 people, it's always important to have somebody that has your best interests at heart. And out of that, you need 4 personalities, but you need to always have the numbers sorted, but most importantly, have fun while you're doing the deal. So is there any other little tips you want to add just before we finish off?
Definitely review contracts before you sign
Yep.
them. Get
Yep.
someone to review them for you if you don't understand them. Be careful if you're selling a property be careful of asking your real estate agent to add special conditions. Number one, they're not lawyers. Your lawyer or your conveyancer can have a different view. And number 2, they're actually breaching their obligations. So the Estate Agents Act, which deals with real estate agents, says that a real estate agent can fill out a contract. And they're not breaching their obligation to not act as a lawyer by filling out a contract. As soon as they start adding special conditions, they're now acting as a lawyer and in breach of their legal obligations. So it's actually an offence for them to do it.
Well,
So if your real estate agent is adding special conditions, be very careful, and definitely be careful of signing it before getting that advice. And like you said, have fun doing the deal. At the end of the day, it's to that you're purchasing or selling to make you happy.
we'll get the police commissioner on here next. But most importantly, I think what you're saying there is just don't overstep your boundaries. Stay within your lane and have the right experts do their job properly.
Yep.
Joseph, been a lot of fun. Thanks for coming
Likewise.
on the journey
Thanks
on
for
the New
having
Property
me.
Show. Thanks, mate.
Appreciate it. Cheers.
All right, ladies and gentlemen, welcome to this panel. The question, the debate is, why does the customer, or why are we paying too much for real estate? Who's going to lead us?
I will.
Okay.
I don't know if we're paying too much or if people think they're paying too much. As a buyer's advocate, just seeing that the stock levels are low, but there are still buyers out there and there's still people that can borrow money. You just got more people looking at a property than you previously had. And very often the impression could be, let's say you're going to an open for inspection and you could have 15 groups. People think, oh, wow, look how many people there are after this property. It's going to go way over the advertised price. So it's what people start to build up stories in their head against what's actual.
The perception.
Yeah.
I think that's, sorry.
Stock levels are low, so what do you think?
I think I would have to agree with
Yeah.
Cynthia. I think the property buying game, depending on what cohort you're looking at, specifically buyers advocacy myself in AI, I'm seeing that the buyers itself in the residential space, probably under the 1 million mark, are usually going through property, and there is a perception that they're overpaying, but it's because there's a lot of competition currently out there. So what's happening is the emotional side of a property purchase gets the better of them. So the reason why I guess they're engaging on our side for buyers advocates like myself and Cynthia is because they need that support. They want someone to take the emotion out of it and actually look at the facts and look at the property value rather than look at the property advertised price. And I think that's a common misconception, that there's an advertised value on the market that real estate agents set for what the property will sell for, but it doesn't necessarily mean that that is the value of that property in that location and you're going to get a return at that price in 5
Could be
years.
double-edged sword there. Sometimes they can underquote, which is kind of
true.
illegal, and then you think you're getting a good deal. Or sometimes the agents put too much on the property. But wouldn't your job to get the most amount of money? Wouldn't your
Well-
job really to be make them pay too much?
I mean, everyone that would say agents push for the best price at one point want to sell their house, and
Yeah.
they look for an agent that wants the best price. So I think it's a bit of a weird mix to be in. It depends on what side the end customer is at. But at the same time, as an agent, I've never seen a vendor that wants market value for the house, and I've never seen a buyer that wants to pay market value for the house. You would know this as agents, we sort of deal makers. We would try to close the deal, bring people together, but obviously we are getting paid by the vendor to get the best price. And it would be a disservice to get paid by someone and not do the best thing by them. I could say the same thing for a buyer's advocate and say they bring the pricing markets down, whereas they're getting paid for the buyer to do that. So it's the right thing to do by your client. in a sense.
It depends on the time too that you want to spend in the deal. There's no real, you never really pay too much for a property really, unless you buy an apartment most of the time. But the thing is we've learned on this show is that property continues to go up. But the most important thing that we're really managing there is the expectations of emotion. It's frustrating when, yes, you do miss out on a deal. And the biggest thing that I heard that you do, Cynthia, is you get paid to do deals, but you don't do every deal. You walk away from deals. And what's some of the reasons you might walk away from a deal?
Yeah, if I feel that the price doesn't fit in for the property, if the terms are not suitable for my client. Terms are a big deal, and I think that's where buyers advocates also help real estate agents on just making sure that both sides come out strong. Yeah, those are, and again, walking away from a deal is just making sure when you double check again with the mortgage broker, where if you hear the whole thing about rates going up and down, just double checking and making sure that they're buying within budget. So yeah, those are really 3 reasons why I would walk away.
I think
from
also
a deal.
too sometimes this perception of I've paid too much. It could be buyer's remorse. Sometimes they do the deal, and now they realise they've got $1 million mortgage. They've got to pay for the thing over 30 years. So, Carly, if you were looking for a property at the moment, would you go to an agent? Would you look at a buyer's advocate? And how would you know if you've paid too much? What measure would you know that you've paid too much for a property?
From the insurance perspective, I see the difference between the emotional buyers that have been in the market for a long time and just want something and they'll just pay anything and everything. For me, I would definitely use a buyer's agent purely because they understand the lingo, and a real estate agent is going to be a lot nicer and a lot more real to a buyer's agent than what they would to a normal buyer. The way that they would treat a buyer is going to be something completely different to what they would do with a buyer's agent. I guess there's no crap between the two of them. They can't get away with the same things. So I would definitely use a buyer's agent.
So you reckon take the emotion out of it?
Absolutely.
You seem very logical.
Yeah.
That was the insurance brain just there coming out.
Yeah, no, definitely take the emotion out of it. But the buyer's agent's always going to get you the better price.
Yeah. What about having both work for you? At the end of the day, we've got buyer's agents sitting here in a real estate. There is no, like at the end of the day, I want to put you against each other. But there's no reason why you can't actually work together.
Absolutely.
I think the fairest outcome is that the vendor sells the property, your client purchases a property, and they feel good because everybody's got to get paid for their service. Okay, there's conveyancers, there's brokers. There's a lot of factors that actually go into buying a property, and I think the thing that I've looked at here, and we might just debate this in a second, but you've got 2 decades of experience. Okay, so you're not emotionally driven by a deal. But now we introduce the new version, which is AI, buyer's advocacy. Now there's a difference in your price. So I'd almost compare there, could I pay a small subscription fee versus your fee? And then I might feel then too, if I was the customer. I'll tell you what really I notice the most is really just the client. It's their perception, their expectation. So what would you say to the customer so that they don't feel they're paying too much? What would you do?
I think so they're not paying too much, you have to look at the data and you have to look at the facts. Part of our role, and look, with AI, we use it as an efficiency. So essentially, we're just scanning for this information to make it quicker for the buyer, quicker for us to analyse as well. So we're not sitting behind a computer for 14 hours analysing and agonising. So I think the biggest thing is the data points to help you make a logical decision, not so much on just the look and feel of the property or the location and the infrastructure surrounding it, but looking at the historical market trends, looking at where are the growth periods and pockets in that city, what is going to drive value in that property, what is the land size. You need to look at the data and the facts before you just purchase purely off price and what's advertised. And coming to what we were talking about with overpaying, or if you feel like you're overpaying, it kind of blows my mind about representation. If we look at the US for a second, 89% of their market are represented by a buyer's agent, and they use a buyer's agent. There's only a small portion that don't. If you look at Australia, 3% are using a buyer's advocate for their property purchase, and that is wild to me that one of the biggest financial investments you'll ever make, you're happy to go for battle by yourself and kind of trust the process without having all the education, as Reza was saying earlier.
I think also, just very quickly, in the USA though, they're about to change the commission structure. There's a lot more fat in the deal.
Yeah.
So there might be a 6% com, and they might pay, and they might have deals set up with buyers agents behind the scene, and they're being conditioned that way. But what I'm hearing also then is there's also 97% of Australians that could try out a buyer's agent. So give you guys a go at least once.
That's right.
And see how that goes. What about you, Reza? So how would you identify if you feel the client's paid too much?
Look, as an agent, I would love
Yeah.
that.
Yeah. Very honest. We've got an honest agent.
Um,
Yeah.
The other thing that I think hasn't been covered here is
Yeah.
at the same time, there's a difference when you're buying an investment property and when you're buying a property for yourself. When you're buying a property to live in, sometimes the emotional factor could be that you can't put a value onto it. So let's say, for example, if someone trying to live closer to their parents who are, at a very elderly age and there's only one property in the area, they can't pay too much for it. They could set years for a property to come out, but to negotiate over 20K, 10K, 15K doesn't make sense.
Of course.
If it's an investment property, it's a whole other scenario because it comes down to your return on investment. So it also matters what is your purpose as well, So that's how I would
So
look at it.
motive. You would use motive,
Motive,
as
absolutely.
if the motive's strong enough, you'll pay what you need to
I
pay.
agree with the point that was said before. It's always the emotion that drives the price up, especially in buyers. And I've actually seen this, a few last deals. People come through the door, they put an offer, which is good, the vendor's happy with. During the cooling off period, they come back out because the emotion is gone. And the cooling off period is 3 days. So they back out, something happens, and this happens 3 times with one deal. So it's out there because people are excited. There's shortage of housing. They find one property, they want to go, they want to get the house, but then they go home, they talk to their friends, they talk to the family, and they change their mind. So these sort of things come down to emotion and comes down to your motive as well. If it's property for yourself or if it's an investment property, those are different discussions.
Excellent.
When you talk about emotions, though, as buyers advocates, we do a lot of auction. Well, I know I do a lot of auction bidding for that reason, because you just say another $1,000, another $1,000, because your heart's really in your head, and that's probably lucrative for us because people just don't have. They know that they won't be able to hold back, and this is a limit that they have. I've been to many auctions, and I know that I've looked at people, and you can see that they've just gone again, and they shouldn't have gone again, but they just don't know how to hold back.
That is true.
And that's where the emotions take
Another
over,
debate.
and that's another, that's a
Auctions.
completely other debate all
That's
on
the
its own.
purpose
But
of
I
an
think
auction.
that working real estate agents and buyers advocates, we can be best friends and we can be worst enemies, because I have agents that will phone saying, I've got the stock, knowing what I generally buy. And then if they don't have to go to market and I can save their client just on the marketing side, and it's a faster deal, why
It's a
not?
win-win.
It's a no-brainer. So I just think that our relationships with real estate agents help all three of us, the client, myself, and the real estate agent.
There
Absolutely.
is somebody
Yeah.
missing
Okay.
from this debate.
Our mortgage broker,
Apart from that,
a real
who,
estate agent,
who kills deals?
Conveyancer.
Conveyancers.
conveyancers, and building inspectors.
And building inspectors.
Yeah.
So
Yeah, pest
I think,
inspectors.
as I said, and we look at this in the 3D concept that we're in at the moment, but you guys, you're doing the work, you're doing the work, or you'd be the customer in this case. You're trying to be the selling agent where you think everything's honky-dory until the solicitor comes in and puts some terms in, or the building inspector comes back with ridiculous, or they miss something. I think really what happens is I think you need to look at it in a percentage, okay? So we'll probably need you 30%, you 30%, and the rest of it's illegal. The most important thing is make sure the documentation's right. I think how I would sum it up is how you've paid too much is this. You've set a budget, you've paid for the advice, you've sold the property, but then you don't get what you paid for. You've been lied to. You've been misled on the terms, or the property has electrical issues or plumbing issues. That's when you know you've paid too much, because the rest is just in terms of the client sets the expectation of what their budget is. We know the property is going to go up, and really worst case scenario, if they hate the property, they can sell it again. Really good debate. Thank you for being on this one, and look forward to discussing, I guess, solicitors, conveyancers, real estate agents, auctions, and all the other things made up around new property. But my advice is get in the game, Don't sit on
Definitely.
the sideline.
Absolutely.
Build your portfolio and go from there. Thanks
No,
again.
absolutely.
Get the
Don't
right
pay
advice.
somebody else's mortgage, pay your own.
Love it. Fantastic. And that's all for this week. Thank you for joining us. If you want to see the full interviews, check out our website, and we'll see you again next week.